Actually all changed to EXP, except in my office, because Chris Brown owned all of them but one. The one that I was at in Nancy, it was co-owned with John Kelly, and then John Kelly asked Chris Brown if he could keep it as Remax office, and then all the other offices got switched over. So I've known him for 8 years, whatever, since he got his license. And we've always been in contact, but one of my coworkers, I stayed there because of him, but unfortunately he passed away. So then because of that, I'm like, all right, I'm ready now, because I was taking care of him, like in his business. He was taking care of me, I was taking care of him. So anyway.
And now you've been with Omar for...
Since March.
Yeah, I was going to say, I knew it
beginning
was
of the year.
Yeah, Omar's a great dude.
He is.
Yeah, I was so close to I'm with the XP too.
There you are, which one?
So,
oh, is that like... Yeah. I've heard that name.
So,
I'm better with things than me.
Yes. So I was like kind of going back and forth.
Well, where do you reside? Closer to there?
No, I live in like Clinton or area, but they don't have an office right there. But it's like they don't take another step. So it's kind of an organization, not a team. So it's the 80% split, but there's not another split on there like in Walmart or how other teams get. So you still get more benefits, you still get the downline, so you can't get on that kind of stuff.
Hey, that was best for you.
Yeah, but no, I've sat and talked
That's
about
hilarious.
it.
Plus, like, Cincinnati.
Oh, it's huge.
So,
Adds a whole nother
it's not something I wanted to talk about. What's your first name?
Joe?
Yeah, we are first. But no, we're not. I just added it.
Definitely.
Yeah, 59 is different.
My phone's over there, ready for the recording. So I can't. But yeah, I mean, you guys are killing it. Has a lot of your business come from your experience mostly, or from your trust?
Yeah, I don't advertise. Yeah, I don't advertise. Fortunately, I'm blessed to just like repeat people that I know with my sphere. Every once in a while, I'll get a lead from like, from him. Where we have like and like a whole bunch of other platforms, Zillow, and stuff like that. But some of them are going to start. Yeah, we're going to start today. So we're kind of like gonna regroup and like figure out where to put our money.
Yeah, the Zillow leads. I mean, I feel like you get one good out of 100. Like you're just calling.
Yeah, I've only closed one this year, and I've only gotten one this year. No, I've only gotten two, and then the other guy was like 115 FHA. Land and 3 bed. So we're like in Cumberland County and Salem, and even Salem City was like 200,000. Like you can't get anything. He's getting separated. He's living with his wife right now. We're getting divorced. So he's not in a rush, but we're not
divorced, but not right.
Yeah. So because he's still there. He's in. Like his story is like the first time he texted me, like, I'm gonna marry you. I was like, okay. I was like, I got a boyfriend. I'm good. Yeah, exactly. You can't even afford a lot. And then now he has a small but yeah, like 2 weeks. And then on the Zillow, but on that guy, he was making mortgage. So then it's like that, I think 25%. And then I'm on 75, 25. So now I'm giving him 25. Now I'm at 0. I want to be in the negative. I don't really care. It's not like I'm going to be showing him a lot of houses, and he's going to pull the trigger. It's just fine. But I'm confident in 2024 we'll get him something. In the winter. But he's like on the back burner.
Right. You have a lot of other stuff going on that is just kind of like there.
Yeah. It's not, he's freaking out because Like,
All right, so there you go. I don't want to. No, you're good, man. Yeah. Okay. But I'm here.
You're good? You ready to start? All right, I'm just going to clip it on Kyle real quick. Okay. Jimmy has his, right? No. It's not clicking?
Okay. All right. So we got one. Are we ready? Does that mean we're ready, Jim, or I gotta wait for you?
2 seconds. 2 seconds.
You guys all look so professional.
Looks like school here. So before we get started, I'll just give you a real quick intro. If you have never been to one of our meetings before, I tell the same stupid story every time. I got into business when I was 17 years old. And back then, technology wasn't really as it is right now. And I remember literally going to the library and going to the card catalog and doing research for how to start a business and how to file a mercantile license and how to pay sales tax. And as I got older and I failed numerous times in different parts of business, I was like, man, I really wish there was something where there was a group of people who got together and helped and supported other business people. And I've been doing a bunch of different stuff with real estate for years now. And I went to a couple different real estate events and I was like, man, real estate people are kind of different than everybody else. They really are supportive. It's not like what I was used to when I grew up. When I grew up, it was like, no, I got the fucking secret sauce. I can't tell you what I do because you're going to take my shit. But I was talking to a couple different wholesalers and they were like, oh, well, we'll all sit down and talk and plan. And I'm like, you're going to tell me what you do? You're going to share your secrets with me? Like, that's fucking crazy. And I was like, we should really start some type of community meeting session so that someone who's never flipped a house before can ask questions, or someone who is a realtor that kind of wants to talk to 5 or 6 people about it can go there. And we can have people that have flipped houses and bought properties and hard money lenders come up and talk and make some type of a community where you can listen for a little bit, eat some pizza and chicken wings, and then afterwards talk and bullshit and exchange cards, and business comes from it. And that just creates positive energy. So that's why we do this. We try to do something once a month, every 5 or 6 weeks. We don't charge any money. I don't really care business wise for that. I just want to create the type of energy that helps people succeed. So hopefully you come back, you bring friends or whatever. We do a bunch of different stuff, and we try to bring in experienced people. Like these guys aren't getting paid tonight to be here. They're just here to share their experience. Or don't cash that check yet. We didn't tell you about that one. You know what I mean? So our first speaker tonight is Kyle McCann. He works for asset-based lending, which is a correspondent of the mortgage company that I work for, Crown Home Mortgage. Kyle is somebody that I met through networking events, and he actually came to a seminar and we talked afterwards to go through. So I have a bunch of questions. It's super informal. If I ask him questions and we're talking and something pops in your mind, don't think you have to wait until afterwards. If something pops up, ask a question, shout out. If you have, interjections or whatever, you want to ask something, go through. It's not like you're going to get punished for talking out of turn or not kicking you out of class or nothing like that. We keep it real informal. Kyle's going to go. And then our second speaker was supposed to be Steve Pittman. He had a family obligation. So we have a real quick interview that I did with him online. We recorded it. He will actually be here later to talk to everybody, but in order to keep it going. And then we have Mario last to go through. So I'm going to start with Kyle. Kyle is a hard money lender, right? That's kind of the way you would describe it. Yeah. To do it. So real quick, give like a Reader's Digest of the products and offerings that you specialize in and what you do on an everyday basis to help investors do their dream.
Yeah, so we basically have two products. So pretty simple here. First one's a 12-month bridge loan. It's 12-month interest only, no prepayment penalties. Basically, people use that to purchase and rehab homes. You can also build new construction with it. We can do short-term cash outs with it, but it's all essentially the same product. Second product is a 30-year fully amortized product. It's called a DSCR-based loan. It's the debt service coverage ratio. Basically, these are commercial loans for landlords. People can either refinance or purchase homes, no tax returns, no debt to income requirements. Really, you just want to see the property positively cash flows. So what I do all day, every day is drink from the fire hose of people trying to buy investment properties right now and sorting through good deals from bad deals and trying to be as honest and forthright going forward of saying this is a dog shit deal, don't do it, or this is something I think I can get behind, and we're putting our own capital in front of it. We are, like you said, correspondent lenders to brokers, that kind of thing. We're our own fund. We're backed by a large equity position. We're actually getting off our first security this week, which is pretty cool. So we've been around for 14 years, done about $2 billion in loans. At any point in time, I can put about 500 million out on the streets at this point. So just trying to churn through it. But at the same time, we're a pretty credit-worthy company because we are holding these things on balance sheet. So we try and keep a low default rate.
In the camera, I forgot.
Yeah. So, basically what I try and do is protect my company every day by choosing good deals that we can get behind. And at the same time, I feel like I can protect the consumer borrower because a creditworthy deal for us as a lender is usually a positive deal for you guys as investors.
Sure. If you're going to lend on it, it's probably going to have a positive outcome.
Yeah, I don't hope for foreclosures. We don't. We're not a company that takes back property. That's not what we do. If for any reason that happens, we're selling them as non-performing notes. Like we're losing money when that happens.
Sure.
So.
Okay, now let's walk through a little bit of a scenario for people. If I'm a first-time investor, I've never flipped a property before. What's the minimum credit score I need to talk to you about doing a project?
Operate in a shade of gray there. I'd say 660 plus is probably a good place to be. There's mitigating factors for that. I've done first-time investors down to like 610, but they've got cash in the bank, or there's other things that are gonna make us sway our minds. But typically, I'd say 660 plus is a good place to be.
So working in that box right there, 660 credit score, first-time investor. How much of the acquisition price, meaning if it's $100,000 purchase, how much of that $100,000 does the investor need to put down?
I can put up to 80% on that.
Okay. So 20% down, and then you'll do the full reno budget or 80% of the reno budget?
We're always going to cover the full reno budget first. So basically, we have kind of 3 cap out tiers.
Okay.
It's loan to purchase price, like you said. So purchase price plus the renovation amount. I'll cap out at about 80% for first time investors. We're also going to cap out at 85% total loan to cost. So purchase plus rehab, I can go up to 85% of that. And then LTARV, loan to after repair value. So I'll cap out at 65% of that for first time investors. So whatever's basically the lowest of those three numbers is what your total loan amount's going to be. We're always going to fund 100% of the rehab first, throw that in escrow. Whatever's left over in the loan amount, we put towards the purchase price.
And that way, with all that algorithm talk you have, you're pretty much ensuring that it's going to be a successful transaction. If you're lending 65% of the after repair value, even if they totally fuck it up, they're probably not going to lose their shit in the transaction.
Yeah, the hope is yes. And we're going to take some common sense approaches too to the actual project. So as you come at me with a first time investor here, I don't want to see somebody try and do an add a level or a full gut necessarily or new construction. I want to see new bedroom or new bathrooms, new kitchens, floors, paint, like cosmetic. You know, walk before you run, nice and safe. Yeah, you can get over your head really quick when you start managing subs, contractors, you know, can walk away with money all the time, those kinds of things. So if you can show up and know what's going on in front of you as a first time investor, it's really easy to know how to, all right, these guys are installing kitchen cabinets properly, or hey, the tile work looks like crap, redo that. You know, when somebody comes in and runs HVAC line, you might not know what you're doing, you're trusting them. So we like to see kind of that easy first step.
How much do you vet the contractors that the person is going to use in their transaction?
Not a ton, to be honest. We're gonna make sure they're licensed and insured. If I had to, you know, pull out a resume for every contractor, I would never be able to actually push loans through. So that's part of a borrower's responsibility. I mean, we try and make sure you guys don't get into bad deals, but it's also your deal. So you have to be able to manage that. Be smart about who you're hiring, ask for references, and manage those people, show up on job site.
Will someone look at a proposed budget and say, this looks like bullshit, that's never going to happen like that? Like if someone hands you
I will do that every day.
that says, hey, look, I'm going to do the floors in the kitchen's going to be 35 grand, the floors are going to be 4 grand. And someone's going to say, no fucking way, you're never going to do floors.
Yeah, so I look at every budget that comes through. I have to look at it before an underwriter looks at it, type thing, and they slap my wrist if I hand over dog shit. So I look at it, and it's all dependent upon property type. What we're looking at, you know, a property in Olney that you're going to do a kitchen for $7 grand, great. If you're in Haddonfield and you say you're going to do a kitchen for $7 grand, no, you're wrong.
You're going to do kitchen cabinets for 7
Yeah,
grand.
maybe. Yeah. So I'm always looking for kind of inline spec here. If you're making a luxury property, your budget should be higher because you shouldn't be relying totally on, you know, Home Depot finishes type thing. But if you're going down to Millville and you're going to do a burr and you're going to run some rental grade stuff, yeah, absolutely. Show up, put in the Home Depot cabinets.
Okay. Now, do you order the appraisal and you have your own management company that handles the vetted appraisals, or is that done through
Correct. So we do not use an appraisal management company. Basically, we have pre-vetted a bunch of, you know, geographically located appraisers. They cover X area, and we just kind of feed those guys. So they understand our business model. They understand how to write an after repair value appraisal. And they're way more attentive than somebody from Appraisal Nation or whatever, because we're feeding them on a constant basis. And it also keeps down cost because Appraisal Nation or whoever isn't taking their piece. So we do full appraisals though.
Okay. Now, if someone doesn't want to flip, but they want to renovate and then keep, what is that process with you? If they want to hold it as a long-term.
Absolutely. So that's, I'd say, the majority of our business right now is people that get in, they purchase something, they rehab it with our 12-month, you know, bridge loan. Essentially, it's treated like a flip, but instead of their exit being the sell, they can refinance it with us into a 30-year DSCR loan. You can cash out up to 75% of the appraised value. So the idea is you add value to it and then you suck the equity out so you can just rinse and repeat and go do the next one.
Is there a time frame that you need to own the property in order to do the 75% cash out? Like if they bought something for 50 grand and they do the work and 60 days later it's worth 300,
Yep.
will you give them 75% of 300, or do they have to wait 6 months from acquisition?
So there's two different rules of thumb here, basically.
Okay.
So our minimum season's 3 months.
Okay.
So we don't want to see somebody buy something way under value and then the next day refinance it and suck out all the equity, because that might have just been bad appraisal. There's a lot of risk associated there.
Okay.
So there's a 3-month minimum seasoning from when you bought the property to when you can refinance. You can start on, month 2 and not refinance, not close till the 90th day. That's fine if people can move that quick. But if you are refinancing in under 6 months, we limit your cash out to a total of 120% of your total cost basis.
Okay.
So basically, if you buy a property for 50 grand, you put 50 grand of renovation into it, your cost basis is $100,000. I can't give you a loan of more than $120,000 for the first 6 months.
Right. 6 months and 1 day, you go full 75.
For sure. We rarely see those deals right now just because of how tight the market is and how competitive it is. If you're doing 120%, that fantastic. Congratulations.
Right.
They're just not really out there right now.
Right. Okay. And that would be 2 separate closings. It's not one product. that
It's not
converts
it's
into
not one
something?
product.
Okay.
Unfortunately, it is 2 separate closings. But we can hold on to a ton of your docs from the first one to make the streamlined process in the second one move a lot faster.
Okay. Now, if someone just has a couple rental properties that they want to do just a straight DSCR, do you do any type of blanket stuff? Do you do any type of cross collateralization, anything like that?
Absolutely. So we can do blanket loans. I can tell you from a pricing standpoint, it's not advantageous right now.
Does everybody know what a blanket loan is before I say that? Because that's probably blanket loan means you have one loan to cover more than one property. So if you have 4 properties worth 100 grand each, you get one loan for $400,000 and make one payment. So you don't have 4 separate mortgages. Makes it easier to keep your books and stuff like
Yeah.
that.
So we do have the optionality for that, and it does make it easier for you to keep your books. That said, when you blanket them, if you decided to sell one, there's like a partial pay down.
Sure.
It can get cloudy. So because there's not a cost savings at this time, there might be in the future. I don't really advise 2 blanketing properties.
And now, what about a return investor? We talked about a first investor,
Yep.
whatever. So you have somebody that's done 4 flips and 4 exits in the past 24 months. They have a 700 credit score. What are their parameters look like with you?
Yeah. So, I mean, we're relationship driven, and all of our leverage is basically dictated by experience.
Okay.
So the more experience, the better in our minds, and the more round trip exits with us, the better in our minds. But basically, if you've done 5 in the last 3 years exits, you're at 90% loan to cost for us, which is kind of top tier.
Okay.
So that pricing gets pretty competitive too.
When you say exit, does that count a held rental property, or is that only flip?
If you can prove rehab on it.
Okay.
So, if you bought something, you keep it as a rental, but you never really, you might have painted it or something. I can't really count that towards experience, but if you did like a true burr method type thing, you bought something, you could have flipped it, but you decided to keep it. Absolutely. That's experience.
Okay. What about like someone who's looking to do like large bulk purchases? Someone says, "Hey, like we talked about, there's this property I want to buy. It's got 4 lots. I want to knock it down and build 5 houses." Something crazy like that.
Love it.
Yeah.
New construction's kind of bread and butter. We're super bullish on that. Again, the same thing. If you've done 5 new builds in the last 3 years, I'm at 90% loan to cost. I don't know if anyone else is doing that right now. So super high leverage on new construction. We believe there's a housing shortage and the values aren't really going anywhere. And if we can create housing, great. There's a strong demand for it right now. So we're super bullish on new construction. And again, 90% loan to cost. So say you buy a plot of land for 100 grand and you're building for 200. Your total cost basis is $300,000. I can basically give you $70,000 towards the land and fund your entire construction. You're bringing 30 grand to the deal.
Nice. All right. So now we're going to go with advice kind of stuff. I kind of ask a lot of the same questions every time. What is the number one mistake you see first-time investors make in your experience of doing this?
Trusting the wrong people. Vet your contractors, vet your Megger everybody in this. Ask for referrals. Things can go awry pretty quick when you put faith in people that you don't know. That I would say is the biggest one that I've seen things go awry on, and then keeping liquidity on the sideline, because inevitably you're going to find issues with your property. I speak as an investor myself. I've probably flipped 20 houses, and I have a portfolio of about 50 rentals right now. They've all been burr method, and I've fouled up a ton of them. You walk into something, you open up the walls, and you find something that you didn't know was going to be there. And now your budget's changed, but the loan you got was written for the budget that you had when you showed up to it, and they're not giving you any more money. So have something on the side to be able to keep going on this. It's one of those things that if you have 40 grand in your bank account and it's going to cost you 30 grand to get into the deal, pause and save up more money before you get into the next. Don't overextend yourself.
Okay, and then personally in deals, have you partnered up with different people where their experience might be a benefit to partner up with? And
Absolutely.
Yeah.
That? I have partners on 90% of the deals I've done. I'm not a construction guy. I can sit there and hang drywall and install a ceiling fan and whatnot and come in and help out with finishes. But it's important to have that guy on your team. And yes, partner. I love partners. And then from a financing standpoint, we're going to count the experience of all partners towards your leverage and rate. So if you have a great deal, but maybe you haven't done it before and you find somebody that, hey, has done this a bunch of times and can't find a deal right now, you partner up with them, split the cash. It's a learning experience for you, and it's another, check mark for them. Plus, you get to rely on their experience for the financing.
Anybody have questions from that? Anything goes along?
Yeah, hi, Bill Watkins here. Newbie to this kind of thing, so I just wanted to talk about numbers that were thrown out real
Yep.
quick, and you can clarify for me.
Mhm.
Earlier, you said 20% down, and then the example you just gave, you said it would be 30 minimum to 100. Also, actually 300. Like,
Yep.
what is the bare minimum here if I want to get started as a new person? What am I looking at? 20%, 30%?
So it's going to depend upon the deal structure itself. So if you're just talking about down payment or total cost on a project.
Yeah, so it's $100,000 property. It costs another 100 to get it market ready.
Yep.
So
So a $200,000 project, I'll probably be 85 to 80% loan to cost there. So you're talking about $30,000 to $40,000 down payment plus your closing costs. Yeah, it's variable what that after repair value is too. It's got to be good skin in the game. If there's good spread. If there's not, then you're probably bringing more.
Yeah, they're going to do an after repair value appraisal. So the appraisal that they do during that is a present appraisal and then an after repair value appraisal. So if it says it's going to be worth 380, then you'll max out with your whole thing. If it says it's going to be worth 310,
yeah,
you're going to be bringing more.
Yeah, that deal, that same deal where you're buying for 100, putting 100 in, it's only going to be worth 225. I'm going to tell you right away, don't do that deal. 250 is marginal, and like from there we'll go. But everything's going to be kind of situationally dependent here. But again, we cap out at loan to purchase price, loan to cost, and loan to after repair value. We're going to take the lowest of whatever that is. Nah.
As far as like the money for the contractors, is that something that we would get the money and just give it to you, or do you have like withdrawals? Like, what is that?
Yep. So it's a draw schedule. It's pretty much the same way any construction loan is usually set up here. So we escrow whatever your construction budget is off the front. You complete a phase of work according to a draw schedule that you've laid out in the beginning, and then we reimburse for work done. You can take as many or as few as those draws as you want. We're not looking for receipts. We're not counting screws. Basically, you fill out a spreadsheet that says, hey, kitchen counters are going to cost $4,000. When I see kitchen counters, you get $4,000.
Okay.
If they only cost you $3,200, you still get $4,000. So
You're borrowing it.
yeah, we're not asking for receipts. So fun game to play for contractors.
Because I know other ones are very hard.
Yeah, we're not a bank. Yeah.
How do you do the inspections? Is it virtual? Is it
Yeah,
pictures? Is
the-
it someone goes out to the property and does that?
So we used to do physical draw inspections. Recently, we rolled out something called TruePic, which is a really cool app that you download on your phone. You take pictures of the work done. It geolocates the house, so we know that you're not in the neighbor's house doing the same thing. And then basically, yeah, right? You're just at Home Depot being like, toilets. I got toilets everywhere. But basically, we see those pictures. I have a draw team that reviews them, goes and checks your budget, says, hey, these are the things that they've done, and then we release those funds to you, usually 24 hours. So it's already in the escrow, so you already borrowed it, but you would, if you sold the property, that's just going to be returned to you. What I always advise everyone to do is drain the escrow account at the end, because it's going to limit your taxable income on it. So it's going to show that you actually borrowed that money, so your profit's less. So again, if you're a contractor and you're doing this, a lot of times they'll try and show as little profit on the actual deal as possible and then make it on the construction. So those kitchen cabinets are always $1,000 more, you know?
I got another question for you that I didn't think of before. Can you have a contractor on your deal that has the same last name as you?
Yeah.
If you're the buyer.
You can be your own contractor.
Okay.
If your license is insured, absolutely.
That's
Yeah.
a no-no in
Yeah.
my residential area. You can't do that.
Yeah.
That's a hard no.
We don't even require general contractors for a lot of smaller projects. So if you're getting in and you're doing kitchens, floors, bays, paint, and you don't have to pull any permits,
There's no
you
permits.
can
There's
just
no.
do it.
So only the permeable stuff, like the GC.
Yeah. Well, I'm going to ask common sense questions. So like, if you tell me you're doing this and you've never, oh, I'm not getting a contractor. Well, have you ever hung kitchen cabinets before? No? Well, get a contractor. That's about it.
How much on the draws?
How much are the draws? 175.
What about interest rate?
Variable. So we're basically between 9.99 and 12 and a half right now. 9.99? Yeah, that's our lowest right now. Interest only, no prepayment penalty. We don't need bank statements. Well, actually, we do 2 months bank statements, just looking to see that you have cash to close, and that's about it. So we're not looking at tax returns, no W-2s, no debt to income
It's not an income
requirements.
qualification.
It's, yeah, we want to see that you have the down deposit and basically a little bit in reserve so that you can feed yourself type thing. We don't want to see anyone be totally cash poor, because that represents a giant risk for us, because you're always going to feed your family before you pay interest.
Do you care about how soon the money got put in there? Like if you see my bank statement and there's $100,000 deposit yesterday and I need $60,000 to do the transaction, do you care? Does that have to be seasoned for a
No,
certain period of time? or as
there's
long
no
as money's there, you're
seasoning
good?
requirements. Sometimes we're going to ask for a letter of explanation for like a large deposit, but it can be as simple as, my brother wanted to invest in my real estate flipping company.
Okay.
Both those programs, the bridge and the DSCR, it's 660 credit score.
So the DSCR, we can go down to 620. 620. So basically, once we get below 680 on the DSCR program, things get constrained. It's a tighter credit market, but we can go down to 620 on that. But then my minimum loan amount is going to be 150,000, and my minimum DSCR is going to be 1.5. That low. So it's got to be a real strong deal.
That's my other question. Like, what's the low? Like, let's say you got like a piece of crap and the rent is at 50, like, is that even qualify?
Yeah. So minimum loan amount's usually 75,000, and even those need to make a lot of sense because you're usually in, CD class markets. So a big part of when somebody sends over an address to me, hey, I want to put this, I'm Google Maps, and it's the first thing I do, and I'm street walking. If you've got board ups all along the block, I'm not going to do it. If your house is the board up and everything else is nice, great. That's exactly what I want. So it's, we're going to make common sense judgment calls here. There's no real black and white, guidelines to it. A lot of it is subjective, but, do I want to be in lesser neighborhoods in Camden? Probably not. I mean, if you're a block from Donkeys, maybe, but there's certain, Landing Square I love, but a lot of places I probably avoid there. Because $75,000 is the loan minimum on both products.
Awesome.
I have
Oh,
another
go
one.
Yeah.
Just like a just a question. Say like I'm on the MLS, I find a great deal. Right? Do I call you and say, hey, I have a great deal. This is how much it's gonna cost. And you're like, okay, yeah, great. But do I have to submit like a proposal to you or get like a pre-approval?
No, it's as simple as a phone call typically. So, again, I'm going to do some due diligence with you on the phone. So same thing. You call me and say, hey, I want to look at this property. I think it's going to cost X amount to fix up. I think you're going to contract for this amount. I think it's going to be worth this amount. I can nail through your experience, your, credit, liquidity, and I'll then do some research on that property all while we're on the phone. And I'll tell you, hey, run, or I think we can do this. And if I say, hey, I think we can do this, what happens next is then you'll fill out paperwork. I don't want to waste anyone's time, so I try and give quick no's. Hey, don't do that. But if it's a yes, then basically I'll give you 3 documents. It's a rehab budget that you'll run through. It's just line items, how you're going to spend the money. The other one's an experience verification form. If you've never done it before, you don't have to fill it out. Third one's an application. Application is just a link. It's online. It takes about 5 minutes to fill out. Basically, once I have those things back, we hop on a call. I run through your budget with you, turn you over to an underwriter. Day one, you speak with an underwriter. They approve or deny your file.
That's for like a DC.
That's for a bridge file, like a fix and flip or purchase and rehab. If you're going right into DSCR, that's way more just numbers. I care less about the market in that sense. If you have a cash flowing rental in Bergen Square, like I don't care. That's fine. It's cash flowing rental. It's not a neighborhood that I would regularly invest in on the bridge side, but okay, yeah,
Look
it's
at the
fine.
numbers work, dude.
Numbers work. So the bridge side's about 2 weeks. I'd say 2 to 3 weeks. The DSCR side's 30 days. Depends how smooth everything runs. That one's a little chunkier. Cool. Any questions?
Thank you. Kyle will be here hanging out afterwards. Everyone can ask questions. We're going to do a real quick video with Steve Pittman. Real quick, Frankie, our IT guy, is going to take this to the next step. Maybe we can get it to work. It worked earlier.
Tonight, we have a special guest, we have an opportunity. We have one of our scheduled speakers, Steve Pittman, has a family obligation.
It was
to
there.
Make
Yeah, they got
sure, absolutely 100% family comes first. Got a banquet to go to for his child. So he may literally be here in the crowd right now or coming soon, but we wanted to make sure we could get some content done previous in case we want to make so Steve, welcome. I'm sure everyone can be around the club and see right now. Steve Pittman, we're getting title. You do a ton of different stuff, even though you are Mario Lancioni, not really a real estate person. You want to do that, they do the side hustle, alter egos. Okay. But now everybody having to so you own and operate a title company right now, and you have the reputation for being an investor title company because you're an investor yourself, and you have learned all of the rules and laws and regulations to do things that the title companies do.
Very true. So investors, they like to think outside the box. They like to do deals that aren't
Playing the gray area,
or kind of still play. We want to use sure. A straight retail deal, bring the lender in, buyer, seller, 2 agents, get a clean house, you get a CO, done deal. First of all, 45 days.
Right.
We don't get those kind of deals, not all, we get some.
And actually, the people that would be here tonight, you're not talking to them anyway. They're not, anyone who's at this event is not a clean fix and flippers, that kind of thing. So that's more the audience that you're reaching right now. So they wouldn't really care about the clean units, because that's not.
Well, they're all on cubes.
Sure, sure.
When was the last time anybody bought a cream box?
And,
It doesn't exist.
yeah, if you know someone.
Well, the key to this business is when these guys find these deals, sellers usually get stressed.
Yeah.
When that happens, that means they have X amount of time to get things done, either for foreclosure, just plans to be filed, sheriff's sale, etc. Or they're trying to do some creative finance and stuff, where maybe the seller doesn't have that opportunity to just sell it. Maybe they can hold the notes, like mortgage, different others.
Yep.
Other companies shy away from that because it's insurability.
Yeah.
If it's done correctly,
Sure. And you learn that. We'll get into that for a little bit. Let's go back to the beginning. Why did it take that for a little bit? What was the one thing that got you interested in real estate? Because like you said, you were not a real estate person. I'm gonna call you a science nerd and anything like that. But you were not the typical non-college educated real estate person.
so real estate to me was in college, took a refund check from my student loan, or $100,000. Condo cost $55,000. $5,000 down payment, mortgage was like $650 a month. But now I'm renting out 2 rooms, 2 different guys, each room giving me $1,000. Making money.
Yeah, I start.
When I start, didn't think anything of it. Now, fast forward, I got into government work, embassy work. I'm working 6 times as hard. I'm working overtime, government's taking my money, or even get it. I think myself, down on my bill. So I want to work for myself, so I have the benefits of make money first, pay my expenses before I get taxed.
Yeah.
That would go all the way.
That's awesome. And I know, in following you and being around you and the people that you work with, you partner up with a lot of different people on a lot of different transactions that see you a part of different things, or people see you as a partner with them. So what are some of the things that you look for in that partner? Because a lot of people that are going to be in the building tonight sometimes are just someone who brings something to the table. They might not bring everything to the table, but they might be able to look for somebody else. So what are some of the things that you look for when you do that part?
Here's the thing, if I can work with someone who is lay on the table and say, well, here's my strengths, here's my weaknesses. What can we do together?
Yeah.
I appreciate that. Then work together, let's make things happen. But if you're gonna push smoke up my ass, I don't have time for it.
Right.
You know, I look at everything as, what is my value and time?
Sure.
It comes with a certain price.
Mm-hmm.
So I'll partner with anybody that brings something to the table. Doesn't have to be extraordinarily big from the table, or something.
Yeah.
I'm honest about it all.
Nice. Now, when you're looking at a property, because you'll do a flip, or you'll do a long-term hold, or you'll do a short-term hold, what are some of the things when you're assessing a property, you're looking at bricks and wood and ground? What are some of the things that you look at that say this makes the perfect candidate for a flip versus I'm absolutely going to put this in my portfolio?
I think that's a key point.
Okay.
I walk into a property, look in there, and the structure looks very good. Maybe it's only half as much. No problem, stripping down just stuff.
Okay.
That's probably going to be flipped. It's not right. I'm putting X amount of money into a property, but I know that the market rents in that area are not covered for my mortgage. Where I make a profit on my home, and it has to be flipped. Gotcha. Now for rentals, they're restored. If I'm going to a town, it's lets you know. Otherwise, I will not. That's why I bought them.
So, absolutely.
But they're into it and just carrying this profit. But now my mortgage will cost me percentages that I set. So at this point in my career, I'm going down on this now, on details, but I have a certain percentage I know.
Okay. Now, do you have a preference, or is your appetite right now, I'd rather be a long-term holder if I have to, but I will, or is it just whatever it presents?
Depends on how the property presents.
Yeah.
So right now, I'm actually looking to get away from residential homes. Only because I have an appetite for a commercial. So I'm looking more towards that. I like the new build game, one of our clients, kind of hitting this deep in take me down that rabbit hole, so we'll see how that goes.
Okay.
Because new builds, I'm sure. So we'll see what happens.
Now, do you like the down the shore aspect of it because the dollar figure is higher, so then the price point would be higher, profit would be higher? Or is that just, are you like one of those people that likes the fashion and design aspect of it? The things you like in that area?
So for me, I'm not a fashion designer guy. I'm knows where I dress.
Yeah.
Okay. What I like about the shore is my percentage. I don't deal in whole terms. I deal in percentage.
Okay.
No matter what, you get a certain percentage set, doesn't matter if the changes it just from that percentage. But your adjustment is not determined. The buying of the product. My 36%, that's what I want to make. That's what I'm shooting. What I like about that short is, if I can get 36% more up here, you get 56%. The secondary market, the vacation area, people buy second homes. They're willing to spend a little more to get pushed to the beach, not making more beach.
Yeah. Do you have any fear that in the face of what possibly could be an economic downturn, that one of the first things people would cut out would be the second home market? Is there like a fear that things were really good for a while and that was the market was good, but if the economy drops and people stop spending, you think that'll hit the shore?
It will hit certain markets. And it may be very easy. It's very good. People that have $5 million spend $400. Stop that.
The other thing that the other counter to that always is, I always looked at it as people that were spending $10,000 to go on vacation. Now they only spend $3,000 to go on vacation. So you can't go to Europe. I mean, if you're going to go to your kids, you can go there and do it. So yes, some people might not buy. Jordan himself about that.
Let's look at Airbnb. All right. People say it's $20. $20 website.
Actually, people would say that.
There's no shoppers right now.
No.
Once you go away and they don't promise it.
Yeah.
For example, a hotel room is very low. It has full kitchens. It has plates, forks, knives, glasses.
Yeah.
There's a table outside your door, you can sit outside. People want to go over, they want to come to the table. So the guy that now can't buy the shore home, he's still going to stay at the top.
Sure.
So if I set myself up as a business person, I set myself up with multifaceted avenues, selling the shore house, or I'm having building that people can rent short term. Set myself for a little bit of safety net.
Okay.
So I mean, I have the influx of income from this avenue.
Okay. So if there's someone in the room tonight that's here, and they're thinking about buying their first rental property, what would be one or two pieces of advice that you would give them before they dive into that type of transaction?
If it's their very first.
Absolute first transaction, they've never owned a non-owner-occupied property before.
That you have to ensure that you have reserved cash in the event your tenant does not pay.
Okay.
Because it could drag you on.
Sure.
So my rule of thumb is 6 months of reserve cash per rental property.
Okay.
The other, if you want me to expand on that.
Yeah, for sure.
I have a 2-to-1 ratio that I've been using since I started. For every every 2 years I do that water. That seemed to help build up cash flow and capital at a nice rate, steady rate. Now I sold a large portion of my portfolio, and I'm rebuying some more. And now I'm starting to do the hotel work, I much better, just by shining rate.
Now, for an investor that's looking for the long-term, like, you know, I wanna buy and sell 30 years from now. My thought always was buying a quad or buying something like that is probably not the best move, only for appreciation value. Because 20 years from now, when you go to sell it, a single family would sell than a multi-family. Because when you're selling a single family home, you have 100% of the market to buy it. On a multi-family home, you're holding to move any investor or something like that. Strictly from an appreciation point, is that something that you look at, or you're looking more cash flow is king, you make the cash flow right, whatever happens 30 years from now?
No, so I think that it depends on the investment. What works for you, you know, what they work for Frank, you know what for us.
Right.
So the deal for me is, what if I want to build that long term? You got 10 single family homes in Washington Township for a place let's say you. I hold them, as long as you're being paid off for the next 20 to 30 years. I'm gonna sell these houses. That's retirement home.
Right.
That house is for 250,000, that's a check. Give me this all the time.
Yeah.
Or paying along with my kids. So that's a plus, that's a strategy that you might want to make.
Right.
What about the duplex, the triplex? Because when the investors are in this, now they can build their portfolio.
Sure.
If they want to buy them, established.
Yeah.
You know, those people are out there, and those people are just small, the possibility is small. So I think it's all about how you want to strategize your future.
Gotcha. All right. Now what about doing transactions with people that you might not really like? I always talk to people about it because, of course, it's business, it's not personal. But are there people that you see them either as a listing agent or involved in a transaction where you'll say, no, okay.
It comes back to the whole intent. Right. So if I'm going to partner on people, and long term to me is anything. All right. So that's a long way.
Yeah, that's a long relationship.
So if I'm going to do that aspect, if I'm going to go look at a property, I'm going to do business with someone. If the payer is not there, I don't have trust in it.
Now, what if they're on the other side of the transaction? I don't even mean like you. If you look at a property and a listing agent, or you know a person on the other side of the table is kind of shady, will you steer away from that, or will you ignore your personal feelings about the person?
If there's shady toward performance that I feel it may cause me more headache in the long term, then I will not. Now, if it's a shadiness just because the person's character traits for whatever reason, that's when I call my realtor, and I call Francesco well and step into the middleman. That's something that I would personally offer. I bring up offering.
All right. Now, let's go with 2024. We've done this for a while. And the real estate market's been a little turbulent lately for me. I've been doing it for 20 years. This is my 4th turbulent wave, so it's not really that big of a deal. You know, it's like on my 5th night. What do you think 2024 has in store? Because I listen to people and I've never heard more disparity in predictions. I hear some people say are experts that are telling me that I'm not going to make $1 until 2025, and I have other people that I listen to that say 2024 is going to boom right around March. So what do you think?
First of all, I just want to make a big shout out to Francesco well. Yeah. I all this, make sure you know that.
You're right in the room.
Yeah, I was, you know.
Right.
But back to your question on 2020. There's so many skeptics. Yeah. There's so many people that think they have a football. You don't know what's going to happen. I don't know what's going to happen. What I can say is I try to put together something that I can adjust as these things. Okay. Interest rates are the highest they've been since the nineties, but then the eighties had interest rates in the 14, 15% range. 2008, we had a crash, but we had a crash based on mortgages that were subprime. And they were, most of them 511s, but not qualified buyers. Then we put all the CDOs together, got to sell off, make more money. They all crashed. Right? We don't have that right now. We have an inventory problem. There's not an inventory. Yeah. We have interest rates that are average over the last 15 years. People forget that. And that's 4%, 3%. I don't think we're going to see that again. Maybe not the next.
Maybe high fours, yeah.
Okay.
Maybe high fours.
But 70% back in the early 2000s.
Yeah.
So looking at now, people say, oh, we're going to interest rates. But what happens when interest rates drop?
I think that was the last question anyway.
Tonight we have a special
That-
guest.
That was the last question. We're good.
Either eyes.
Good deal. Put me back in.
Steve, you'll be here later on.
He'll be here to answer the rest of them. Yeah, take your time. Nobody's even watching.
Hey, bro. Let's do that again. Right. Boom.
All right. Got our last speaker of the night.
Want to just start off by introducing myself?
Yeah, yeah.
All right,
Talk a
cool.
little bit about you, how you
Yeah.
got involved.
Absolutely,
how you
cool.
got into it.
What's up, guys? How you doing? First question is, how many times, anybody in the room, how many flips have someone done specifically? Have you done 1 to 5 flips in the room? Anybody? 1 to 5? You done one? One? Okay, cool. So flipping properties. What I want to talk to you about flipping is, one of the things about flipping is it's very, very hard to flip properties when you go into it without understanding the money side of it, the renovation portion of it, and then also understanding how to underwrite deals. So there's 3 major components of flipping properties. When I started out trying to flip properties, it started because it was a means to needing to make additional income. I had a W-2 job and it was able to help me fund my rental game. So I was able to build a huge portfolio of rental properties. And when I left the W-2 job, the issue that I had was money coming in the door, because the W-2 was able to help fund my real estate journey and build a portfolio. So the flipping is not an end game. Like there has to be an end game to flipping. You have to say, you know what, the profits that I make, the money that I make from it, it has to get redeployed in the real estate. So that's the whole purpose of flipping properties. That's my opinion on flipping properties. What I would tell you about flipping properties, the main portion that I would stay in is there is first-time home buyers, which I would say are starter homes. Then there are second homes, so step-up homes. So there's two segments of the business. Then you go into the luxury market. Steve mentioned with the shore area. What I would do in the beginning is stay in those 2 sections where it's starter homes and second homes, because it's a cheaper price point. There's more buyers. So you got to stay into the area where there's more buyers. And then there's an ability to sell it if you're in a jam, or possibly refinance it because it's just cheap price point. If you're doing it in a market that's a luxury market, your exit on the deal is very, very limited. So that's the tricky part of buying luxury. Even to this day, the most profitable flips that I've done were in the first-time home buyer market. I like it. I like staying in that arena. I don't veer off into any sexy projects because it's just not my cup of tea. I don't like doing them. And I just continually do cheap rental properties. Like I like gobbling up properties in areas that nobody likes to go to. Totally different than what everybody else does. I'll go into Frankfurt. I'll go into Delco neighborhoods. I was buying in Paulsboro before Paulsboro became Paulsboro, before Woodbury's Woodbury. I was there. Like, you know, that's what I bought. So these markets change over time, because what happens is everything starts from a metro level and it starts inching its way out. If you look at big markets like Toronto, the price point gets bigger, people keep moving out, migrating, prices move up. So that's where I like to focus. I like to stay in those lines where I know appreciation is going to be forced, but there's a cash flow piece on it. But back to flipping properties, I would always say that you got to find the deal. The deal's important, so you have to know how to source it. Sourcing a deal is very, very important. Second piece is money. How do you get money? And then the renovation part. So those are the three main components to me of flipping properties.
So let's break them down real
Yeah.
quick, one by one.
Sure.
Finding the deal
Sure.
now versus when you started. So when you first were flipping your properties, how did you find deals? And now that you've been doing it for a while, how has that changed how you source deals?
So in the beginning, finding it was so easy. I mean, you can go on the MLS and just gobble up properties left and right. It was unbelievable.
How long ago are we talking now? So references,
2017, 18.
27, okay.
Incredible. I mean, anybody could
Sure.
get deals. HUDHomestore.gov was a great source that you can get properties. I was just cleaning up on that website. For now, it's virtually impossible to get properties that way. I see going direct to seller, forging relationships with agents are great. Forging relationships with small banks, that's been a huge source for me in Philly. Not so much in the Jersey side, but you got to forge great relationships with, I think, the smaller banks and smaller connectors. There's some big connectors in certain markets. So that's the best way, I think, sourcing deals is forging relationships. I mean, you could spend like PPC is a great source. I'm lazy, so I don't like spending money on fucking like virtual assistants and calling people. So I want people to come to me, tell me your pain point, tell me the choke point that you have. Can I solve it? Can I make a deal? Can I swing something? So that's what I like to do.
Okay, now in the last 3, 4, 5 years, a lot has changed, and you talked about that. In 2017, the word wholesaler was like
Yeah.
used car salesman, scum of the earth.
Yeah.
You wanted to stay away from that.
Sure.
Now it's become more mainstream to get off-market properties. How do you use those relationships, and how do you incorporate those type of off-market relationships to get you deals or to find deals and get them
Yeah.
out to people?
So I think there's wholesalers and then there's home buying companies that are investors. There's two totally different animals. Wholesalers are like new guys that are just like shooting from the hip, trying to make a deal happen. Home buying companies are investors. They're actually guys that buy some deals. They know what the burr looks like, what percentages make sense, and they're active investors too. So those are great resources to have. What I do from a resource standpoint is I just leverage more banks, honestly. I have more smaller banks that source deals. And based on what I see, the leverage is you have to buy multifamilies now because you can't do rental properties from the burr standpoint because interest rates are high. So you're not going to get out of deals clean, and you're also not going to cash flow. So there's no purpose of that. So flipping to me is not dead, but you're not doing volume. Like in 2017, I was a serial flipper. I mean, I was doing tons and tons of flips, screwing it up most of the time in the beginning. And then I sorted my way out what my niche was of flipping properties, what made sense. But if I'm in the shoes of a new person, I would not do like mold infested houses, adding additions, structural issues. What are other issues? Slopey homes. I mean, there's just various homes that I wouldn't stay into. I would stay into the carpet paint type of stuff, lipstick jobs, and just get in and out. I think everything 30 days or less, 45 days or less are like the best flips to be into because there's just less risk and there's time value. So just from a time value standpoint, I always look at like taking a quick nickel than a slow dime. Like if I can make 20 grand quickly or 60 grand over 6 months, take the 20 grand and just keep it moving. So evaluate those deals because I would do a flip where I'd make 6 figures, but it took me like 18 months when I could have made 15 grand and not have tied up resources and opportunity costs. So there's some thinking involved down the road when you get to that point. But I would say keep it clean, simple, stay in those really like Lindenwalds of the world. The cheaper price points, like the Paulsboro flips are good to do. You can get in and out of those things, but that's the kind of area. That's
Okay.
the place I would
Now,
go.
somebody calls you up and says, "Hey, Mario, I got a really good property for you to look at," and you're going to walk up to it for the first time.
Yep.
What is your process in figuring out this is a flip, this is a long-term hold, this is something I'm just going to get under contract and wholesale to an investor? Do you have like a B, C, D, E step process to go
Yeah.
through to analyze it?
My brain's probably firing in like 100 directions right away. So I'm
Okay.
thinking, is it a single family? If it is, I probably won't keep it as a rental right now in this current condition. So there's the other exits would go wholesale. Would I find a tenant buyer, which is a kind of exotic way of doing something as far as finding a buyer? Also, probably flip it if that's an option. Another exit strategy would be, is this something that I could possibly partner with somebody? You know, possibly partner with a new student where they can make a little bit of money on it and also learn and educate themselves on it. But big ticket items on that would always be like roof, the mechanicals, the time of it, and things of that nature. That's how I would look at it. Yeah.
Now, as you were going through from your start, did you partner up with people, seek help from mentors, do that route, or did you fuck it all up and figure out how to fix it yourself?
Yeah, unfortunately, I did both. I partnered up with people, and I fucked it up and figured it out without a mentor. So what I think about is, it's like going into an octagon, right? And you're about to fight somebody in 6 months, and it's the baddest person on the planet. And if you go into the octagon without a corner man and a process, you're going to get your ass kicked. And it's the same thing with real estate. If you don't go into this thing without a process and a coach who's going to teach you those two things, 9 times out of 10, you're going to get screwed up. And I got jammed up. My W-2 helped fund a lot of the screw ups privately, you know? I mean, I was living kind of broke in some situations because I was like funneling money because I bought a truck for a contractor. He stole all his tools. Like, I would do dumb shit because I didn't have time to juggle all this stuff. So you learn those things along the way. But partnering up does help the learning curve, and also money, because if you have a money problem, then they can help you go 50-50 or whatever have you. But if I partner with somebody, I would probably not be the lead unless you know what you're doing. If they know what they're doing, then it's better to partner with them, because then you can kind of go behind them and you can learn the business through their eyes.
Now, you talked about partnering. If someone said, hey, I want to bring something to Mario and be a partner with you,
Yes.
what are you looking for in something, whether it's a newbie that's just got a really decent deal or whatever? What are you looking for when you're trying to partner up with people, both inexperienced and experienced?
Well, I would ask them, what are they trying to accomplish? Like, what are they trying to accomplish from partnering with me? Like, what's their angle? Like, do they want to learn? Do they want to make money? Like, what's the thing? Usually it's learning. So it would be more valuable and advantageous.
Sure.
A deal like that, I would actually give them more equity or a percentage in the deal, but I wouldn't put any of the money up. I'll say, I'll walk you through it. I'll give you all my resources and you'll be golden. Like, there's no issues, but it also has to punch out on the back end that they're not going to get jammed up with not making money or screwed up on a loan. But they usually would need an experienced person to partner up with because they don't have the experience to get a loan.
Yeah.
So that's where the advantage is for them.
Yeah. And now for your funding and acquisition and everything, are you still using hard money? Are you still using lending relationships to do that? And
Yeah.
how does that process work for you? How's it changed a little bit from when you started?
So my mentor put me in a room with a private lender in Idaho that has like 50 to 75 millions of private money that he raises. So anytime I need money, he 100% funds it. He charges me like 3 points on the front, 15% interest. So it's expensive money, but it's guaranteed money. Like, so I can be super competitive with a lender like him. I have an attorney in Philadelphia, same thing, 100% funding. He buys it. So it puts me very competitive in the market where I can just go in and just be extremely aggressive and guarantee I can close the deal. So there's levels to the game that you're in. So once they look at, it's called an REO schedule. So if you have an REO schedule and you're established, you can send it to these lenders and they're going to look at your resume and say, this guy's stats make sense. Yeah, I'll lend it to him. And they feel protected because they know you have experience, but they'll 100% fund it. They're not for everything. You can't refinance with them. You can borrow from them in the beginning. So I would say I'm more in the private space. I never use my own money for deals, and I wouldn't do it. Even if I have it, it doesn't make any sense. Right. Yeah.
When people hear big numbers, they get scared. And that's one of the hardest things for new investors. When you hear 15%, when you hear large numbers, 3 points, like from a mortgage perspective, conventional loans, 15%, that. But from an investment perspective, how do you digest that and not get sticker shock when you're looking at that? How do you work it through your head to figure out, well, that's going to cost me $7,000, but I'm going to make $40,000, so that's what.
I look at it from, would I make $20 or no dollars? Like, am I going to make money or am I not going to make money? So it's all associated with, would I rather make money, period. So I'll pay for speed, convenience, and access to those type of contacts. Because what happens over time, if you're paying points to a person you go back to, they're going to trust you and they're going to lower their rates. They're going to massage their terms over time for you to make it work for both parties. They don't want to lose you. They don't want to lose the contact, and it's a win for each party because it's so very simple.
Now, with technology changing and all these different things that we see, AI, what type of stuff are you doing? Are you incorporating in your everyday business that's giving you a little bit of an advantage, giving you an edge where you would have thought in 2018, I would never have a chat bot answering phones or something?
Yeah.
What are you
I
doing
would
to-
say I think my process of finishing rehabs is strong because we utilize the right technology with our virtual assistants and with the boots on the ground and our contractors. So we have a person that goes out every Friday, takes pictures, they upload it, week to week progress. We send it to the lenders. They appreciate it because there's no other organized flipper or person that borrows money that puts them in folders. So we create a Google Drive. We send them weekly progress pictures, and they adore it. And one of my virtual assistants just gathers all the documents, provides everything when it needs to be come time for the refinance process or when we're closing out a property. So it's just the structure of keeping things clean between whether it's AI creating emails for you or virtual assistants or being organized. It just leverages you competitively by borrowing money or flipping properties. Yeah.
Is there a project that you have not undertaken yet, but is on like your bucket list of something to
Project.
eventually do? Like, is there something where, like, for me, I'm like, one of these days I'm gonna buy like 150. It's gonna
Yeah.
happen eventually somewhere down the road. Is there something like that that's on your vision board or whatever that you're just waiting for the right time to
Yeah.
step into?
Yeah, it's probably a multifamily deal, like something solid.
Yeah.
But I would do the same thing. I would go to a person that has done it, join them, probably be an LP on the deal, or just participate to learn the process, and then eventually try to do my own type of multifamily project. But right now, no. Yeah, I'm hanging out.
Mentality wise,
Yeah.
because that's super important. Because this is a stressful business, and
hmm
you want to kill people with road rage and all kinds of stuff that's going on. So, what do you do to keep your wits about you? How do you, like, whether it's personal development, podcast, meditation, whatever? What do you do to keep a calm demeanor and be a good dad and a good person? How do you keep yourself sane?
I think it's really just exercising, eating good, and it just allows me to have the energy I need. I mean, that's the most important thing. Plugging in with the right people that keep my mindset strong, that are making more money than me, that are like have bigger goals, bigger aspirations than me that I want to chase. So even if I feel like I'm coming up short, I look at it in a quarterly rate and I'm like, damn, I actually did a lot. So what they do is way bigger than me, and it makes me feel like I got to kind of chase them. You know what I mean? But yeah.
Do you put yourself in rooms or do you join groups to have those
Yeah,
people in your
yeah,
life? Is that what you do? You
I pay
mentor?
big money to mentors that mentor me on those type of things,
Okay.
like from just a business standpoint, understanding how to buy a business, acquire a business. I've owned my own business before with Sean, so I understand like acquisitions now and what the right way to look at buying a business. So, but yeah, I mean, masterminds, mentorships are massively important to keep you, tapped in, because you can go off the rails by just your own voice inside your head just constantly telling you that you're doing something wrong, but you may not be.
Yeah,
You need reassurance.
for sure.
Yeah.
Anybody got questions? What's that? That's his brother.
Yeah.
Yes, for sure.
Yeah.
You can't tell by looking at him.
Yeah.
All right, cool.
Cool.
Thank you very much.
Oh yeah, you're welcome, brother.
We'll be
Absolutely.
Mario will be here answer questions. Kyle's in the back. There's pizza, there's chicken wings, there's water, there's soda, there's beer and wine in the refrigerator.
Cool.